Hi, I'm Nupur Kumar, Managing Partner at Fact Professional, and I'm here to talk about the changes for early distributions of your retirement plan. Some of you may already know about this, but a lot of people don't, even though it's a measure that could potentially offer relief to any qualified individual with a retirement plan. So keep watching to learn more about 1099-Rs and the early distribution, what it could mean for you, and how to treat it on your next tax return, which probably is happening right now. So first off, what is Form 1099-R? So I like to think of each of these forms to have some type of naming convention. So 1099-R is for retirement purposes. So if you have any type of retirement, it is reported on this form. So if you have a rollover from one 401k into a different type of retirement plan, or pensions, and of course, early distributions, all of these are reported on the form. The only difference is that there's a code that indicates what that is for. So if you look on the IRS page, you can identify it. If you did not receive the form in the mail, be sure to reach out to whomever holds that retirement account. For example, if your retirement is through Vanguard, then you should go to your Vanguard portal and then see if you can pull your 1099-R from there. Without that, it's very challenging to prepare your tax return. And I do have a lot of clients who come back after the fact saying, oh, I forgot to tell you, I have an early distribution and this is going to impact my current return. So something that's really important to keep in mind is this factor here. So what is a 1099-R early distribution? So usually if a taxpayer takes a distribution before the age of 59 and a half from a qualified retirement plan or deferred annuity contract, it may be considered an early distribution. The penalty is usually an additional 10%, which is added in on your tax return. The government has recognized that, of course, many people need immediate access to their savings and retirement funds in order to stay afloat during COVID-19 last year during the pandemic. So they have additional measures that they implemented to make it easier for individuals to access these funds. So I'm sure we've had many clients who made the decision to withdraw their 401k, and this will give you a little bit more of the guidance on how to treat that. So what are the rules that exist under the CARES Act? Because of the CARES Act, the usual 10% penalty will be waived from the entire early distribution for qualifying individuals who pull up to $100,000 of their retirement funds out. Individuals must be able to justify the early distribution with a COVID-19 related reason. So they've elaborated a little bit on the IRS website, so we'll add that in a link below for you to reference. But this could include your spouse being diagnosed with COVID-19, getting laid off from your job or working fewer hours, lack of access to childcare due to COVID-19, or participating in mandated quarantine. So I will say again, we'll mention this in the link below, but it is valuable to recognize that they have quite a wide range of reasons that you were able to withdraw that amount. So the CARES Act defines a coronavirus-related distribution as any distribution from an eligible retirement plan made on or after January 1st, 2020 and before December 31st, 2020 to a qualified individual. Now we're almost 4 months into the 2021 year, and we haven't heard of it being extended yet, but in regards to being able to pull in this year. But I will say that once we do get more information, we'll post with additional information. Now, although normal taxes on the withdrawn funds will not be waived, individuals can distribute these taxes over the next 3 years. So that means that you can distribute it over your 2020 return, your 2021 return, and your 2022 return. So as long as these account for 1/3 of the taxes in their 2020 return. So it doesn't mean that you don't report it at all. It means that it's allocated, but only 1/3 of it is allocated in the current year. For example, let's say you have $30,000 in your 401k account. So let's see if you can do some easy math there with 30K. So usually a 401k is considered a tax deferred retirement tool, which means you don't pay taxes on it now, you take advantage of it now, but when you do withdraw at that time, it becomes taxable. Now with the new changes, you can withdraw those funds now and distribute the taxes because you distribute the amount over the next 3 years. So that means that you would show 10,000 in 2020, 10,000 in 2021, and 10,000 in 2022. If you're filing your taxes on your own, that doesn't mean that you simply only put the $10,000 amount, it means that you would indicate the entire amount, and there's checkboxes that specify that it is due to COVID-19 and the coronavirus, and that's why it's being distributed. And the next few years when you are filing, especially if you change tax preparers, you will need to provide this information so they can correctly make that calculation. So to elaborate a little bit more on how the tax process works, as I said, you should receive this form. And keep in mind that the IRS does receive a copy of the 1099-R as well. A lot of clients go, how did the IRS know about this? Well, when you get that document, the IRS gets a copy too, and that's how they have it on your records. So on the distribution form, there is a code in box 7, and if the code is listed as 2 or shows early distribution, then it means that it was for a qualified reason under the CARES Act. If there is a 1 in the code box, however, you'll need to fill out a form 8915E to certify that your distribution qualifies under the CARES Act. I haven't heard too much in terms of what the flexibility will be indicating here over the next few years. I know that there's so much relief that's been rolled out, but I do recommend if you do have, if you can do that 8915E form, that'll be very, very helpful. If you do not have federal income tax to support, you may just file form 8915E. So there's 2 methods of a qualified individual to include the taxable portion of coronavirus related distribution to your income tax return. So a qualified individual who receives a coronavirus related distribution is permitted to include the taxable portion of the distribution in income over a 3-year period that begins in the year of the distribution, as I mentioned, in 2020 for the tax return, which we're filing in 2021. Alternatively, a qualified individual is permitted to elect out of the 3-year kind of stipulation inclusion and include the entire amount of the taxable portion in this year. So you can make that choice to pay the entire amount. Now, I know that obviously there's a lot of people who are hoping that even though they pay taxes in the now, they may want to pay it back in the future. So you still have the option to do that, but you will have to pay tax on at least a third of it in the now. So the election can't be made or changed after the filing of the 2020 return. So if you do make that decision, keep that in mind that you'll retain that for the next few years. So that hopefully gives you a little bit of an understanding. Now, obviously, if you do, as I said, decide to pay it back, then you will have certain regulations and kind of a direction in order to pay this amount back. So if you did pull out 30K, you show 10K this year and you want to pay a portion of it back, this is the process of what you would do for the next few years. So a qualified individual is permitted to repay any portion of coronavirus related distribution that is eligible for tax-free rollover treatment to an eligible retirement plan within the 3-year period beginning on the day after the date on which the distribution was received. The repayment will be treated as if it was paid to a trustee transfer to an eligible retirement plan. If you happen to repay the withdrawal amount within the 3-year time frame, you would have to file an amended return to get back whatever taxes you paid in excess. So keep this in mind if you are thinking about making some changes. And you decide to go back to this 2020 tax year, which has had so many changes in general, then you may have to file an amended return. And the IRS does take some time to process amended returns. So once it's filed, it could take a few months for it to actually come back to you. Qualified individuals will use Form 8915E to report any repayments and to determine the amount of coronavirus-related distribution includable in income for a tax year as a result of the repayment. All right, that's all we have for today. If you found this video helpful, please hit subscribe and below to stay up to date on the latest developments, which, seem to come out every day these days. I never thought tax and accounting would be this exciting, but lo and behold, this year has been a roller coaster. Well, follow us on social media, linked in our description for more information and helpful tips. We will see you next time. Thank you. Bye-bye.